All right, so today we are going to dive into an asset class that, let's be honest, most people just completely overlook. No, it's not crypto, and it's not some hot new tech stock. We're talking about something driven by two, just undeniable truths. They aren't making any more of it, and the folks who own it, they're all about to retire. This is the story of Farmland and what's shaping up to be the largest transfer of dirt in modern history.
I mean, this quote right here, it really just gets to the absolute heart of the matter. It's such a simple but powerful idea, and it honestly forms one of the most compelling investment ideas out there right now. Think about it. Land is tangible, right? It's scarce, and its ownership is about to change hands on a scale we've never seen before. This is literally where demographics meets dirt.
Okay, so here's our game plan. First, we're going to tackle the why now, what we're calling the Great Land Unlocking. Then, we'll get into the what, why this bedrock asset is so different from everything else. After that, we'll cover the how, the language of leases and how you can actually own the dirt. And we'll wrap it up with two really crucial pieces, the unsexy truth about what you should expect and the insurance policy for how to protect your capital.
So what's really the engine behind this whole opportunity? Well, the thing is, it's not some fast-moving, flashy market trend. Nope. It's a slow, powerful, and pretty much unstoppable force that economists have started calling the silver tsunami.
Yeah, we're talking about the baby boomers, that huge generation born between 1946 and 1964. I mean, for generations, they've been the main owners of American farmland. But now, as they start to exit the workforce, this isn't just creating a few ripples. No, it's creating the single largest transfer of tangible wealth we've seen in modern history.
Now this slide really shows a pretty stark reality. A Federal Reserve study from 2022 found that a massive chunk of this generation is, well, they're just not financially prepared for retirement. And get this, a stunning 43% of those aged 55 to 64 have zero retirement savings. Zero. So for a lot of these folks, their most valuable asset is the land they've owned for decades. The reality is, they might not have a choice but to sell it to fund their retirement. That is the great unlocking. Okay, so with this massive wave of land about to come onto the market, what exactly are we talking about investing in? It's really crucial to understand that we're not talking about some volatile tech stock or, the latest crypto coin. We're talking about something fundamentally different, a true bedrock asset. I mean, look, paper assets are liquid, sure. But we all remember the tech bubble, right? When the Nasdaq lost something like 85% of its value, poof, it can just evaporate. Hard assets like farmland, on the other hand, have real, tangible utility. People will always need to eat. And get this, the data totally backs this up. Since 1992, American farmland has actually outperformed the S&P 500, but with about half the volatility. Think about that. Less risk, with historically better returns.
So how in the world do you value an asset like this? Well, it's not based on hyper-speculation. It's based on cold, hard performance. The key metric, which we borrow from the world of real estate, is net operating income, or NOI. And it's super simple. It's just your income minus your expenses. So for example, if you collect, say, 10 grand in rent from a farmer, and you pay 2 grand in property taxes and insurance, your NOI is 8,000 bucks. Simple as that. That's the pure profit the asset itself spins off every single year.
And that pure profit, that NOI we just talked about, it's all generated by what I like to call the engine room of a farmland investment, the lease agreement. This is where the cash flow actually comes from, and it usually takes one of two forms, either a cash rent lease or a crop share lease.
Just think about it this way. When a landowner leases out their field to a farmer, one person's expense becomes another person's income. It's two sides of the same coin. So in a simple cash rent lease, the owner gets a fixed payment, let's say 250 bucks an acre, no matter what happens. The owner's risk is super low. But in a crop share lease, the owner might get zero cash up front, but instead gets a piece of the action, say 20% of the final harvest. Now that's higher risk for sure, but it also has a much higher potential reward if crop prices go through the roof.
And all of this leads us to how the pros value these properties, something called the cap rate. All you do is take that NOI we talked about and divide it by the property's price. So if that farm with the $8,000 NOI costs $200,000, you just divide 8,000 by 200,000 and your cap rate is 4%. This one little percentage tells you the annual return on your money before you factor in any loans. It's powerful because it lets you compare an acre of corn in Iowa to an acre of almonds in California and see exactly how hard your capital is working for you.
Okay, so right about now, you're probably thinking, this all sounds fascinating, but I have absolutely no desire to go buy a tractor and learn about crop rotation. And you know what? That is the beautiful thing about this. You don't have to.
So how can you actually get a piece of this asset class? Let's walk through the main ways you can participate in this great land unlocking. No overalls required.
So you've basically got three main paths. Path number one, you could go all in with direct ownership. Buy the land yourself. Path two, you could pool your money with other investors in what's called a syndication to buy a bigger property. But honestly, for most people, the easiest and most accessible path is a publicly traded REIT. That's a real estate investment trust, which, just trades on the stock market like any other company.
And REITs, they solve the biggest problems for individual investors. Instead of betting the farm, literally, on just one property, a REIT like Gladstone Land, the ticker is LAND, or Farmland Partners, ticker FPI, gives you a tiny piece of a huge, diversified portfolio. It's all professionally managed, and you can buy or sell your shares instantly on the stock market. That gives you liquidity that you just can't get with direct ownership.
Okay, this is a really crucial point, so we need to be crystal clear. It's all about having the right mindset. If you're looking for a lottery ticket, some 10x return overnight, you are in the wrong place. Farmland investing is literally the opposite of a casino.
And this quote really says it all. You know how the common wisdom is higher risk, higher return? That to get bigger returns, you have to take on more risk? Well, this philosophy completely flips that on its head. The goal here is not to chase risky ventures. It's to avoid the kind of catastrophic losses that completely destroy wealth over the long run.
Let me be totally blunt. This is a boring trade. And honestly, that is its greatest strength. It is not designed to 10x in a year. It's designed to be a stable, income-generating cornerstone of a portfolio that preserves your capital and just grows steadily, year after year, generation after generation. This is all about wealth preservation, not wild speculation.
But look, no investment is totally risk-free, right? So how do you protect your capital, even in a stable asset class like this one? Well, we can actually borrow a tool used by the very people working the land, the farmers themselves.
And that tool is called a put option. The best way to think about it really is as financial insurance. It is the closest thing you can get to buying an actual insurance policy on an asset. It's just a contract that gives you the right, but not the obligation, and that part's key, to sell something at a price you've already agreed on. Let's break down how that actually works.
Okay, this Farmer Joe analogy really shows you the power of this thing. So Farmer Joe knows his break-even price for wheat is $6 a bushel. If the price drops to $4, he's basically out of business. So what does he do? He pays the wheat cracker company a small fee, it's called a premium, for an insurance contract. This contract gives him the choice to sell his wheat for $6 no matter what the market price is. Okay, scenario 1. The market collapses to $4. No problem. Farmer Joe just uses his contract, he exercises his option, and sells for his guaranteed $6. His farm is saved. But scenario 2. A huge drought hits, and the price of wheat skyrockets to $12 a bushel. What does he do? He just lets his insurance contract expire, it's worthless to him now, and he sells all his wheat on the open market for a massive profit. You see what he did? He completely eliminated his downside risk while keeping all of the upside.
And that is the exact same logic you can apply as an investor. You can go into your brokerage account and buy a put option on your shares of a farmland REIT. By doing that, you're protecting yourself from a major market crash. You're paying a small premium to set a floor under your investment, a guaranteed selling price. You're effectively insuring your capital while still keeping all of that awesome upside potential.
So to wrap this all up, let's just connect the dots one last time. We started with this huge demographic wave, the silver tsunami. We connected that to the tangible value of a real bedrock asset. And then we talked about the financial tools you can use to manage your risk. When you put all those pieces together, it really makes you wonder, right? While everyone else is out there chasing the next new shiny thing, is maybe the most powerful and enduring opportunity of all hiding right under our feet?